Hello and welcome to today's event on weathering the pandemic, the emerging financial landscape in Southeast Europe. The event is hosted by the Hellenic Observatory and LSE, the LSE Research on Southeast Europe. My name is Vassilis Monastiriotis and I'm the director of LSE and a member of the Hellenic Observatory. Before we start our clarification here, the event was scheduled to be chaired by my colleague, Professor Bartzokas. Unfortunately, the whole university sector in the UK is disrupted as the teaching staff are on strike over a dispute about pensions. Indeed, we saw very, very big cuts to pensions in the UK this year, as well as about pay, casualization of employment and increasing workload. So Professor Selke is not able to be with us today, and I'm stepping in my capacity as director of LSE Research on Southeast Europe, because we think that the event is of particular value to our audience, both in the Balkans and in Greece, and we felt that we should go forward with it despite the strike. That noted, today's event is not about strikes, it's about the emerging financial landscape in Southeast Europe. What are the forces reshaping finance in Southeast Europe post-pandemic? What are the lessons learned from the policy response to the pandemic? What are the prospects for banks during the recovery phase, and also how technology and non-financial corporations are transforming the banking sector, let alone, of course, the security situation currently with events in Ukraine, which I'm sure some of our speakers may touch upon. To discuss these questions, we are delighted to have today with us a panel of very senior experts on the region to discuss key challenges, proposals for future action, and the role that banks and investors could play towards building back and building better after the pandemic. So let me introduce our speakers. The event will start with a presentation by Professor Anthony Bartzokas. Professor Bartzokas is Associate Professor at the University of Athens and a visiting professor in practice at the Hellenic Observatory here at LSE. He is an economist by training with extensive experience both in academia and in policy-relevant research. He has worked for 27 years on financial systems, corporate investment and innovation dynamics, with continuous interaction with multilateral development banks, including the European Bank for Reconstruction and Development, the EU and UN agencies. So Professor Bartzokas will give the opening presentation, and then we will open to the presentations by our expert panel. Our first panelist will be Mr. Fokion Karavias. Mr. Karavias is Chief Executive Officer at Eurobank and a member of its board of directors. He's also Chief Executive Officer of Eurobank Ergasias Services and Holdings, member of the board of directors of Eurobank Private Bank Luxembourg, and also of the Hellenic Bank Association. Mr. Karavias started his career in banking in 1991 at JP Morgan in New York. And in 1994, he joined Citibank. In 1997, he joined the Eurobank as head of fixed income and derivatives trading. And in 2000, he became treasurer at LSE Investment Bank. Our second panelist is Mr. Francis Maliz. He is the managing director for financial institutions at the EBRD since 2018. He leads the European Bank for Reconstruction and Development investments in the financial sector, including banks as well as insurance companies, non-bank financial institutions, and capital market infrastructure companies. Mr. Maliz joined the EBRD in February 2010 as director in the financial institutions team, and from 2014 to 2018, he served as managing director for Eastern Europe and the Caucasus. Our third panelist is Dr. Debora Revoltella, who is director of the economics department of the European Investment Bank since 2011, serving as the chief economist of the bank. Dr. Revoltella has led the work of the European Investment Bank for some flagship publications such as the EIB Investment Report, and she launched the idea for the design of the EIB Investment Survey, which has become a unique source for measuring and understanding investment dynamics in Europe. Last but by no means least, our fourth panelist is Professor Boris Vujcic, who is the governor of the Croatian National Bank and has been in this position since 2012. Professor Vujcic holds a PhD in economics from the University of Zagreb. And he was deputy chief negotiator in the negotiations of the Republic of Croatia with the European Union in pre-accession between 2005 and 2012. And he was also a member of the Global Development Network Board in the same period, and a member of the steering committee of the European Systemic Risk Board in the period between 2016 and 2019. You'll see we have a quite packed program, but before I pass the floor to our speakers, let me make some brief housekeeping announcements, if I may. For those of you that use the Twitter, in the audience, the hashtag for today's event is hashtag LSE post-COVID, LSE post-COVID, one word. The event is being recorded. Hopefully, if we don't have any technical difficulties, it will be made available as a podcast and video soon at the LSE website. And at the end of the presentations, there will, of course, be time for your own questions. To submit your questions, you don't have to wait until the end of the presentation, so we can collect your questions as we go along. To submit your questions, please use the Q&A feature at the bottom of your screen. The questions will be submitted to me. I will post them, as many of them as possible, to the speakers. And for those of you that are watching the event live on Facebook, you can type your questions in the comment section below the event video. When you submit a question, please state your name and affiliation so that we know who we're responding to. Okay, with these introductory remarks, let me thank all our panelists and our speakers today and pass the floor to Anthony for his presentation.
Thank you, Vassilis. Let me share the screen and then we can start. Can you see my screen?
Yes, Anthony, yes.
Yes, perfect. So let me start with the, what is the idea behind this event and this panel? We thought that the pandemic is introducing radical changes to the banking sector, and we need really to focus deeply on how things work in real life. And for that, we thought that it's extremely important to bring together market participants, important market participants, to share with us their views. So my role today is an easy one. I will kind of frame the background of what we are about to discuss, and then we will have the distinguished invited speakers. In order to give you the introduction, what I decided to do is to start with say, stock taking of what the literature says about financial systems in Southeastern Europe, then move to challenges. Then I would kind of elaborate on important issues with the support of a few slides. And then I finish with the kind of introduction to the panel. Let me try to make it brief and stick to 10 minutes as much as possible. Okay, when I look back to the literature that economists have been producing about Southeastern Europe, banking sector, financial systems, I would say that we can summarize the debate in 5 points. The first point is that everybody agrees that these countries went through a deep transition process, starting from restructuring, expansion, and then there are disagreements about how things evolved in terms of rebalancing and adaptation, reflecting idiosyncrasies of countries. Second bullet point is financial integration. There is a lot of literature about how the financial systems in these countries were restructured with the support of foreign banks. What were the implications and how from crisis we moved to rebalancing in recent years. Third, there is a lot of technical literature about credit imbalances, and people are more or less in agreement that recently this rebalancing has worked and we're not returning to excessive credit supply like in the past. The fourth point is assessment of reforms. There we have interesting literature about technical efficiency of banks in the region, and most of the participants in this debate link the technical efficiency of banks to the European integration process. A final point where this is kind of consensus agreement is about capital markets. People feel that we are lagging behind in the depth of capital market developments in these countries. My second slide is about current challenges. And again, I will summarize the debate and market insights in 5 points. My first point is about pandemic impact. We have seen deep recessions in these countries, but not at the level that we have seen in other parts of the world. So we can argue that it has been a relatively modest process. Risks, there are a lot of risks, and the downside risks are increasing, starting from, say, macroeconomic imbalances and going to more recent problems with COVID waves and also the geopolitical risk. Foreign subsidiaries, this is a source of optimism, I would say, because what we have seen in recent years is that foreign banks are determined to stay and do business in the region, which was not the case a few years ago. Investment prospects, this is an interesting challenge for the region, for the countries, but also for the banks operating in the region, because what we see is that investment recovery is lagging behind, and is lagging behind because of, say, governance structures for risk mitigation and risk hedging, which is a technical issue that is very important for the banking sector. And finally, the fifth point of current challenges is green transition. What we see is that there is a divergence between what is happening to EU member states and what is happening in Western Balkans. For all of them, in any case, there is a problem and there is a challenge of adopting and using the additional reporting and accountability challenges that green transition investment comes with. So in kind of 2 slides, we kind of summarize what is the stock taking of what we see in the Balkans and Eastern Europe, and then what are the current challenges. Let me share a few slides just to animate a bit the presentation. First, we have clear evidence that the leveraging after the crisis worked extensively in these countries, and it worked fairly well. We can see that in the NPL reduction, which followed a consistent pattern in all these countries. Now, when we look at what happened since COVID, it is very clear that most of these countries managed to press down unemployment as a pressing problem to a large extent, of fiscal imbalances. This is even more important in the case of Western Balkans, when we see elevated increases of public debt, which is a serious problem that I would like to come back later in the discussion. When it comes to credit supply, no surprises there. FX loans remain to be important in this region, and that increases vulnerabilities. When it comes to allocation of loans to households and corporates, as I said before, corporates are still lagging behind in picking up, but we see a lot of credit supply activity in the case of households. Couple of slides to conclude my kind of introductory presentation. Here you see the one important benchmarking exercise that the IMF is conducting from time to time. These are the most recent data that we managed to put together. To give you the benchmark for, say, an advanced European country, most of these indicators will be at the level of 0.4, 0.5, or 0.6. What we see in Southeastern Europe is that in terms of institutional quality of financial systems, we are still lagging behind. There is a lot of progress when it comes to access. Croatia is an exemplary example there, as I see, but still there's a lot to be done. My final slide on the overall picture is about the non-financial sector in the financial systems of Southeast Europe. What we see there is that there is huge room for improvement. You see what is the level of credit supply in these countries and what is the stock, the available stock of non-financial institutions in these countries. Again, every benchmark with advanced countries will indicate that there is a lot of room for improvement on non-financial stocks in these countries that might leverage further credit supply and investment in the region. 2 more slides from my side. As I said before, foreign banks and their subsidiaries are determined to stay. And this is reflected in this slide, which I take from a recent survey by the European Investment Bank. A few years ago, the projections and the market sentiment will be much more bleak, much more not optimistic. Here you see that we have a lot of bright spots, a lot of green spots in Southeastern Europe from the perspective of foreign subsidiaries, and this is encouraging. My final point and my final slide is about Greek banks in the region. Since this is a Hellenic Observatory event, I thought that we should have a slide like this. What we see is that when we compare 2009, 2021, you see a huge deleveraging of Greek banks from the region. They are still there with an allocation of roles, one bank in each one of the countries in the region. The volumes are much less now, and it will be interesting to listen to Mr. Karavias, because Eurobank is the bank that really stayed in the Balkans, both in Bulgaria, where that they have an important share, and Serbia. These are the references that I used for putting together this presentation. Let me say a few words about the panel, the structure of the panel, and what we expect from the panel. As I said before, we are very grateful that they made the time because they're all very busy people. We split the panel in two parts in a way. First, we have banking sector perspectives, Mr. Karavias from Eurobank and Francis Maliz from EBRD. One comment for both of them. Mr. Karavias is well known to the Greek audience. For non-Greeks, they should know what the market knows. Eurobank has been very proactive in, introducing new initiatives in crisis times, especially in Greece, but also recently. So it will be interesting to have a fresh view from his side. Francis Maliz is running the EBRD network of banks in the region and in the whole region of operations of the EBRD. He has one other quality that I should underline because I'm asking for difficult questions to be answered. Francis has a lot of experience in Ukraine and the neighboring countries, so he's the right person to talk about spillovers from recent events, negative spillovers from recent events. The second part of our panel is the Chief Economist of Eib and the Governor of the Croatian National Bank. Deborah, in her service at the Eib, has been very original in introducing a firm level and bank level service. I use some of it, and I think she's the ideal person to give us a kind of firm level and bank level perspective on how things are evolving in the region from a comparative side. When I first talked to Boris about this panel, and I asked him to comment on his experience from crisis, he said, which one of the crises? I have seen many. So we are very lucky to have him with us because he will share his experience. And I hope that he will be able also to talk about other issues that we asked for, like, what is the importance of financial innovation in the region, and his comments on capital market development. Vassilis, I will stop there, and please take the floor.
Thank you, Anthony. I'm sure you're going to come back with some of the bullet points you have here in the follow-up discussion with the panelists, but I won't take any more time. I will just pass the floor to Mr. Karavias for his opening remarks. Mr. Karavias, you're muted, if you can unmute.
You can hear me now. Vassili, thank you for the introduction. Ladies and gentlemen, good afternoon. First, let me thank the LSE for the invitation and also Professor Bartzokas for his nice words. We set out to discuss the economic situation after the pandemic, but I think we all agree that the topic has shifted into weathering not the pandemic only, but successive shocks. Never before was the entire world obliged to sail through a global disruption of the scale and scope faced with COVID-19, only to find itself in the middle of an unthinkable military aggression in Europe. The latter will no doubt have long-term impact, not only in terms of geopolitics, and I think Southeastern Europe also will be affected by that, but also in international trade and the structure of the world economy. Therefore, I would like to make a few points, but Anthony, I would like to start from some global themes before we go to discuss about the region in question. And let me start from globalization. It is my view that the economic landscape of the globalization is a thing of the past. As a matter of fact, the world is becoming smaller. The pandemic was the trigger, but the geopolitics are accelerating the deglobalization. A good part of the industrial production will be repatriated to the West. Governments may regulate investment more heavily on national security grounds. And all major powers will strive to increase the degree of self-sufficiency in the main commodities and energy. A second global mega theme is obviously the green transition, is energy, is going to remain with us for decades and is going to shape our economies around the globe, but also in Southeastern Europe. The geopolitics have made clear that we need to accelerate towards the end state of renewables. Still, this will take time. And because of the recent events, the transition to this end state is becoming even more complex. Especially Europe will have to reassess its policies and move swiftly to become less dependent on Russian gas by resorting temporarily to domestic energy sources, maybe more traditional domestic energy sources and nuclear power. But the higher energy cost will persist, at least for the next few years. These two trends that I just described, the deglobalization and the green transition, are both inflationary. So inflation is becoming less transitory, as we were thinking a few months before, and more structural. I expect runaway price hikes to cool down, but the low inflation, zero or sub-zero interest rate period is over. It is crucial to find the balance between containing inflation and still remaining pro-growth, because stagflation is definitely one of the challenges that we may face over the next few quarters or years. There is a third global trend which is very relevant to the financial sector. This is the massive use of data analytics through artificial intelligence and machine learning, a trend that may reshape the financial industry and would positively impact productivity. So with that, let me switch from the global themes to the banking sector, including the banking sector into Southeastern Europe. Once more, it is a challenging environment for banks. Exiting the pandemic, EU banks in general, but also banks present in Southeastern Europe, were set for a growth trajectory. After more than a decade of de-risking, the focus of business plans shifted to value creation and distribution to shareholders. It appears that the invasion in Ukraine may make less certain such an outcome. On one hand, we have interest rate increases which do favor banks. After all, negative rates were an aberration we hardly thought possible in the past, let alone for the long time it lasted. On the other hand, cost of credit may be negatively affected. In any transition period, and we definitely live in a transition period, we should monitor the asset quality dynamics closely. What will the effect of inflation or higher interest rates be for households and businesses? Should we expect an impact on asset quality? Or will we be able to avoid it, as we did very successfully during the pandemic, thanks, of course, to the substantial fiscal boost? Furthermore, the volatility in equity and debt markets may slow down the pace of fee commission growth for the banks. And finally, as I mentioned that inflation may remain an issue for longer than initially expected, this may cause a moderate but persistent increase in the operating cost of banks. So this is a summary of the risk factors that the banking sector in Europe is facing, but personally, I remain optimistic for the sector. So let me close with a few words about Greece and how we at Eurobank perceive our presence in countries in the region. I think you would agree with me that Greece itself is the textbook special case. After a decade of economic crisis and unprecedented recession, the economy was ready to recover. But then the pandemic struck, and then when its effect was over, the invasion in Ukraine came over. The repercussions through higher energy and raw material prices will be definitely felt in an economy that is mostly dependent on imports for energy and manufacturing. However, on the positive side, after fixing major imbalances in the public finance of the country and the external balance, after the banking system achieving an impressive NPE reduction from close to 50% just a few years ago to a single-digit figure this year, Greece is on track to achieve high growth rates for several years ahead. And this definitely is going to affect the neighbor economies of the country. A return to investment grade remains highly likely in the next 12 to 18 months. The fundamentals have not changed, or at least not radically. The country is stable politically and is stable also economically. There is ample liquidity, liquidity through increased deposits, FDI inflows that have resumed in an impressive pace, and obviously the EU funds that we may have the opportunity to discuss further shortly. There is a blueprint for growth and economic model transition in the government's so-called Greece 2.0 plan. And let me say a few things about how we perceive Eurobank's presence in the region. Anthony showed a slide about what was the Greek bank presence before the crisis, what is today. Actually, Eurobank was the Greek bank with the most active presence, and as we speak, more than 30% of our pre-provision income is coming from countries outside Greece. We have a core presence in Bulgaria, in Cyprus, and also a smaller presence in Serbia. And just to confirm what Anthony said, we are committed to stay and grow in these markets. So let me close by saying that overall there are very serious challenges that we are facing, but contrary to the media frenzy we sometimes see, we are not doomed, and there is a good reason to see the glass half full, at least over the medium term. Vassilis, thank you.
Yeah, thank you, Mr. Karavia, and it is nice to have at last some optimistic messages coming. I think also things in the region, there's quite a few positive messages. Let's see if Mr. Maliz would echo this optimism, or we'll see some more a different view on this. Mr. Maliz, the floor to you.
Thank you. Look, I am broadly. Can you hear me well? Okay, I'm broadly on the same side as Mr. Karavias. I'm also optimistic, and the reason is that I see that the economies in the southeast of Europe have in fact proved very resilient to the COVID-19 crisis. And this is in part due to the good job that has been made by regulators in the preceding 10 years. We entered this crisis with a much, much better banking sector than in 2008, 2009. There was much less leverage, liquidity was much better. And so all of the good work that's been done by Boris and his peers over the past 10 years has actually paid off during the COVID crisis. Just to say, for example, our latest forecast, and I know we are overdue, we are actually going to publish a new forecast in this month to take into account the effects of the war. But before the war, our anticipation was that all countries in the region, with the exception of Montenegro and North Macedonia, were expected to have a higher 2020 GDP level than in 2019. So all this despite unprecedented lockdowns and so on. And of course, the war has many impacts, and I'm sure we will come to this. Not least in some sectors like tourism, who thought they had gone through the worst, and now see that there's another wave that is coming for them. We also see that when it comes to NPLs, for example, the progress that was made in the region over NPL resolution that Anthony showed were maintained during the pandemic, although of course there's debt moratoria that blur the picture And I hear that now there's a debt moratorium that is being cooked as we speak in Romania, where I'm calling from, which is frankly a bad idea to do at this stage. But otherwise, we see that there's a lot of progress, and as of the first half of 2021, from the region again, only Bosnia and Albania and Montenegro had the NPLs slightly above 5%, which is sort of defined by the European Banking Authority as a threshold for high level. So nothing really to worry about. As a result, we also see that capital adequacy is actually slightly higher in 2021 than it was in 2019. So overall, a clean health check. Of course, in a context of increasing interest rates, we should worry about one thing, which is going to come and hit the capital adequacies, is the mark-to-market of the debt securities sitting on banks' balance sheets in Southeast Europe. Because sovereign bonds are just going the value of sovereign bonds is going to decrease as the interest rates increase, and so that could hit the capital ratios of the banks in the coming few months. But overall, again, good return, good level of profitability. What I see also as a consequence of the pandemic is an increased digitalization. And digitalization is very important because, to me, it is one of the areas where I see divergence between the larger markets and the smaller markets. I see less innovation and less willingness of the large players to come and invest in these smaller markets simply because the market base is not there. And so I think one of the areas to watch out for, and Anthony also mentioned it in his presentation, is this decoupling of the competitiveness of the smaller markets in the Western Balkans as compared to the larger markets. And it's really important that regional players like Eurobank actually make the effort. And I know it's not necessarily just for short-term shareholder returns, but also for long-term value creation, of spreading digital innovation as quickly as possible across the region. The other area of divergence, I think, there's two actually. At EBRD, we look at an advanced market economy with 6 qualities. Okay, that's competitive, well-governed, green, inclusive, resilient, and integrated. Out of these 6, we see that the Western Balkans region traditionally doesn't work too well, doesn't perform very well on the well-governed and on the green qualities. Well-governed is with typically due to the large share of state firms, and green is due to the fact that these countries are not yet up to speed with the EU standards, but also because these are countries that have traditionally been characterized with high carbon intensity, dependence on coal, outdated infrastructure, large energy losses, low share of renewables, etc. So all of these things mean that this is going to be a drag on their competitiveness because the cost of energy is going to be quite high. And of course, the cost of energy is even higher now that we have an energy crisis across the whole of Europe. Together with the EIB, and I know that Deborah is going to speak just after me, we are big investors in that region. And it remains a very high priority for us. So I think you can expect to see the BRD and the EIB active on the green front in the region going forward. Just a small word before I move on to quickly the consequences of the war on the capital markets development. I think this is a sore point, and Anthony, you also illustrated it in your presentation. The capital markets and non-bank financial institutions are underdeveloped, and actually the two are linked, because non-bank financial institutions typically finance themselves on the capital markets. So you have no funding on the capital markets. It's very difficult to run a proper, say, leasing business in any of these economies. As a result, banks dominate the financial sector. They account for 80 to 90% of assets, and that is not a good mark for an economy. And especially when you look at these capital markets, those that have liquidity, it's mostly government bonds. So really the corporate and the financial institutions capital markets, again, with the exception of Greece, which is a very different capital market, but in the Western Balkans region, it's really too small for modernization. And that would lead me to encourage the authorities in those countries to focus on capital markets development rather than the sexier, regulation of virtual currencies and digital tokens and crowdfunding and blockchains and so on. Okay, fine, that's very good, but a good sound environment for capital markets should be prioritized. And then finally, and really in a nutshell, I'm just finishing a tour of 4 countries in a broader region to try and assess the results, the impact of the war. And I was Poland, Czech Republic, Romania, and Moldova. Of course, for now, I see that I see limited first-round effects, but I see, however, a big impact on the first round, meaning welcoming the refugees. The solidarity that I see everywhere is absolutely remarkable and has been immediate. Including through jobs. It's been facilitated by the fact that a lot of these countries have a very tense job market. So there is actually jobs available in those countries. How long will this last if there's more and more refugees pouring in is of course a key question. Beyond that, there's a huge shock in terms of inflation, energy prices, growth expectations are being revised down. And so while I did feel a quiet determination to transform the economies, I heard, for example, in one of the countries, we need to realize that we cannot rely on single source components from totalitarian regimes, was what one of my clients said. People realize that this is a long-term task. And of course, all depends on how the war will evolve. Specifically for Southeast Europe, there's a very limited exposure to Russia or Ukraine. In Romania, for example, it's really small, especially as Romania is also an energy producer. However, there are links, and for example, Serbia is probably more exposed than other countries to the potential spillovers, not just because it's exposed in terms of FDI, but also because its alignment is going to make it a bit difficult. Serbia has historically not wanted to choose between Russia and the EU, and that is going to be increasingly difficult to follow through. So overall, a situation of high uncertainty, but again, sound banking sectors, and I am not concerned with the banking sectors in the region, even though again there's been a little bit of a tension on the currency in the first few days after the war, and in terms of the cash liquidity of some of the sectors, but it's now all gone back to normal. Thanks very much.
Thank you, Mr. Maliz. I see there's some questions coming up in the Q&A, so people in the audience, please feel free to keep posting your questions. We'll take them up after the first the round of discussion by the panel. We move on to Dr. Revoltella now for her intervention.
Thank you very much, and I'm really pleased as well to be part of this panel and to comment on the excellent presentation that we have seen at the very beginning. And I also follow what Fokion was just at the beginning saying. At the end, we are talking about a shock after a shock. So we have a series of shock that we are seeing affecting the region. And I think it's important to understand how we were coming out from the pandemic and how these new shocks adds to the situation that we had. My task, Anthony was asking to discuss a little bit about the financial sector and the corporate sector. So I will try actually to bring a few elements on how we see the situation, the challenge, and the need for policy intervention in the two contexts, taking in mind this idea of the shock on the pre-existing shock. And on the financial sector side, I think the first shock, so the COVID pandemic, went relatively well, I think, in the region compared to the previous, to the original expectations at the beginning of the pandemic. At the end, we ran, and Anthony was mentioning it, we ran every 6 months for the Vienna Initiative, actually a survey of banks in the region, in Central Eastern Europe, but also the whole region is covered. And there, what we were seeing was that just after a first shock and a lot of concern in the first year of the pandemic, in reality, already in 2020, in 2021, you were seeing that both the supply and the demand condition were relaxing again. It was again coming back to more normality. And even the expectation in terms of NPL, we didn't see the big shock in terms of NPLs that at the beginning people were expecting. So at the end, we ended up after the COVID pandemic with a situation in the banking sector that was milder, even if we were all convinced, and I will talk more about it on the corporate side, that a few issues may be hiding behind. So there was concern on what's next, but the situation remained quite behind. On the financial sector, that's the post-COVID, we have a new challenge coming up. The new challenge is related, of course, to the war in Ukraine, but also to the sanction in Russia. Why is that? And I think there I tend to be a little bit more concerned than the average, and I hope to be wrong. But on my perspective, what I see is that the region is still very much concentrated in terms of banks that operate. It's just a bunch of 5 banks that are, 7, 8 banks that are important in the region. But also what you see is that 5 of these banks have been exposed, are exposed to the Russian sanction, Belarus and Ukraine as well. It's not a systemic issue. It will not affect the systemic stability of this institution, but it's going to affect them in terms of profitability on the one side, but potentially also on their overall strategy committed to the strategy of Central Eastern Europe. We have seen in the past Société Générale already quite exiting from the region, and UniCredit is now wanted to be even stronger in Russia. Probably it's thinking again about the presence. But then if a big chunk of the investment that represents a big chunk of profit for the overall group disappears, the question is whether they will have the same commitment to the region and whether there will be some spillover effect in terms of less commitment to grow, more tightening dynamics, and at the end, a more tightening environment in the region. So that's on the financial sector side is my concern, that indirectly we didn't see the big effect of COVID, of the pandemic in terms of NPLs. I am more worried of some spillover effect, more of a strategic decisions for the big players in the region coming up from the consequence of the war on the one side, but also of sanction toward Russia. That's on the financial sector side. On the corporate side, again, positive and negatives. I think what we have seen is that at the corporate point of view, what we've seen is that during the pandemic, the very strong policy support was well allocated. So it didn't go much to zombie firms. It went to firms that were affected by the crisis. And what it allowed was allowing firms to start some transformation process. So it was a kind of moving in the right direction. But at the same time, we saw that divergence across firms was increasing. And what we were still waiting in the recovery phase was to see if firms would be resilient to withdrawal of the policy support. This phase of resilience still had to be tested, and many had concern that in some cases we would see more default or more non-performing loans coming up. Now the new shock is coming, and the new shock is again, I would say, is the first immediate effect is a much more protracted energy shock And that's going to affect as well the corporate sector in a moment in which they were expecting to have only the positive coming up. So we have again a shock on corporate that could should be faced. It could lead to much more tightening condition to firms, and again coming up more of this insolvency and NPL that we didn't see on the past. Do we need to see a big crisis coming up? Probably no, but we are going to see more tightening, much more tightening condition. At least that's my worry that coming up. So what I think it's important on a policy point of view is to pay very much attention to what we will see in terms of credit tightening condition, withdrawal of policy in terms of liquidity and support to the corporate sector. I'm worried about the cross-border flows, also intra-company cross-border flows that may be affected by this deglobalization, if you want, or enhanced geopolitical risk that is also pricing in intra-company transactions. So I think that on a policy point of view, we have to do much more looking at the liquidity situation and at how this additional shock is going to influence the corporate side, and on the other side also the tightening of lending condition on the banking side. But that's what we have to see on an institutional point of view. We are definitely looking into it. We are looking at extending our support to corporate, to cross-border transaction. We entered directly in Ukraine, actually supporting the government in terms of liquidities, but we are very much also looking at the potential spillover effect of the economic crisis to the rest of the region, and then support on that point of view.
Okay. Thank you, Dr. Revoltella. So some optimistic picture, solid basis and good regulations, good policy making and performance on the one hand, but also, of course, some uncertainties, risks, both for the financial sector and the corporate sector. Let's pass on to the floor to Professor Vujcic, who can speak from the more institutional side of the central bank perspective.
Thank you very much.
Mr. Vujcic, your camera is off, if you don't mind.
Yeah, thank you very much. My camera is off. Let me see. Yeah, okay. Let me try to give first a brief overview of where does the Central East and Southeast European banking system comes from over the last maybe 20 years. It all started in the 90s, of course, with the beginning of the transition, emergence of the private banking, and then the lessons that you learned through the last few crises. And I think these lessons are very valuable for the future. Basically, after the first phase of the transition in 90s, 2000s were basically a period when the banking system in Central and East Europe was fast converging and rapidly growing. It was also a period of very high profitability of the banking system. But with the start of the great financial crisis, the trend has changed in a number of ways. First, the period of 2000s, when we saw the most rapid growth of the banking system, was characterized by the large capital inflows, as the banks have used imported capital to finance both the retail and corporate and the government sector in the countries in Central and East Europe, where they established their subsidiaries. I'm talking, of course, about these Western European banks that expanded into the Central and East Europe and Southeast Europe, and basically were leading the development of the banking sector since then. At the time of the GFC, which was of course not caused by what was happening in Central East Europe, but the crisis that started in the US in the banking system, the vulnerabilities of that type of the growth were exposed in a sense that they have created also imbalances, macroeconomic imbalances, particularly in the current and capital account balances. So what we've seen then after the great financial crisis in the next decade, in the next 10 years before the COVID crisis struck, was a much more modest growth of the banking system and much more based on the domestic sources of funding rather than on the imported capital. I would say that that has made the growth of the banking system and financial deepening to that extent also a bit more modest, but more healthy. So based on a healthier, more stable sources of funding. What we've also learned during the great financial crisis was that sometimes it's not that bad to have less sophisticated banking sector. We've seen that too much sophistication and too much innovation, like we've seen in the US mortgage market, for example, can lead more easily to a crisis than having a less sophisticated, more traditional ways of lending, which do not cause this type of problems. And we also learned that the macroeconomic stability is very important for the banking sector stability, which was, for example, clearly demonstrated in the case of the Greece during the Eurozone debt crisis, but also that the banking sector stability is also very important for the macroeconomic stability, which was clearly demonstrated at the same time by the case of the Ireland. So we had that was a kind of a same crisis, but with very different causes and consequences. During that crisis, Eurozone debt crisis, we did not see any costs of banking resolution problems in Central and East Europe or the Southeast Europe. While at the same time in Western Europe, you had high costs, from very high, for example, in Ireland, but in many other countries as well. And these were the problems of resolving the banks, even in a very efficient markets like for example, Dutch market. What we also learned in the period after the great financial crisis is that you can see a high productivity increase, I would say, in the banking system, with the banking system becoming more stable, more resilient. If you look, for example, at the number of employees or bank branches today, and you compare them with 10 or 20 years ago, you can see that the banks with less employees, less branches, provide better services today than they used to 10 or 20 years ago. So the development of the banking sector has been to a large extent on the basis of rapid increase in the productivity, which is sometimes overlooked. We also have, at least in some countries, for example, in Croatia, much smaller number of banks today than we used to have 10 or 20 years ago. For example, when I joined the central bank, we had 60 banks in Croatia, while now we have only 20 banks. So basically 2/3 of the banking system was closed down by the central bank. Meanwhile, and we have the more competitive and more efficient banking system today than we used to have when we had 60 banks. So I think it's also a lesson learned, and it's also a lesson that might be shared with our colleagues in Western Europe. Also, if you look today at the cost-income ratios in the banks, in many Central East European countries, subsidiaries of the international groups of the banks have significantly lower cost-income ratios than their mother banks, which means that their efficiency is higher, and at the same time they have a higher capitalization. Combined, often they are more profitable than their mother banks. Of course, the profitability is higher in the areas like Russia or Ukraine, where the profitability is still at the levels that we saw in Central and East Europe in, let's say, 2000s, beginning of 2000s. But of course, the risk is also higher, as we just learned. Some of the lessons learned were also transferred into the regulation. It's in part a regulation that we did even in the 2000s, like some beginnings of the macroprudential regulation, but particularly after the great financial crisis, we had a spread of macroprudential regulation in Europe. We had the BRRD, which is there to make banks more stable. We have new liquidity requirements for the banks, etc. And that does make a banking sector more stable, which was then an important asset during the pandemic crisis, which was a very different type of the crisis than the I would say endogenous financial sector crisis that the GFC was. This was the exogenous health crisis. But during that crisis, as was said before, banking system was not amplifying the shocks through the real economy, but actually served as a shock amortizer, and because of we built a better, more resilient banking sector, has helped the quick recovery after the pandemics. Also, what we've learned during the previous crisis in terms of the policy making has helped, I think, to a large extent during the COVID crisis, as we had available tools, for example, in terms of the monetary policy, asset purchase programs that could be released immediately, and the reaction was very strong, immediate, based on the lessons from the previous crisis, which has helped the crisis being short-lived and the recovery being very quick. Okay, I see I'm running out of time, so I'll discuss maybe the challenges that are ahead of us a little bit later. Thank you very much.
Thank you, Professor Vujcic. We have some questions in the Q&A, but we will answer them live. We don't need to type, type answers directly. We are actually at the end of our allotted time for the panel discussion before we open to Q&A, but I would like to take 5-6 minutes for a round of a follow-up round by Anthony. So Anthony, the floor is to you to ask a couple of follow-up questions for the panel, and then we'll open up to taking questions from the audience.
A few quick questions for brief answers. My first question goes to Fokion Karavias. Fokion, when you talk to investors and when you talk to policymakers, and you try to find out what is the optimistic scenario for these countries, what are the preconditions you are proposing to them? What they should do from their side for an optimistic scenario in Southeast Europe?
Okay, Anthony. It is not what the investors should do for the optimistic scenario, but overall what the policymakers should consider as the most important steps in order to have an optimistic scenario. And I think one thing that is a must is to see a broader, a deeper cooperation between the countries in the region, given also the geopolitical uncertainties, which may become more permanent than we feel at the moment. And I think cooperation at all levels, political, economic, but also trade, commercial, and business relations. On the political front, I think it is important that most countries in the region are already EU members, okay? And I think it would be very positive if more countries, especially in the Western Balkans, also join the EU. On the energy front, which is becoming, I would say, the single most important element for the future growth, we should see an energy integration in the region moving forward, and this is quite critical. Let me give you a few examples. Greece and Bulgaria, for instance, share quite large energy projects, namely the IBG, which is the vertical pipeline going from Greece to Bulgaria and then to Romania, the FSRU in the port of Alexandroupolis, and there are also discussions about setting up joint projects about nuclear energy between the two countries. There are also discussions involving Cyprus about the Eastern Mediterranean. So these are all steps to the right direction. Now, in terms of what the policymakers could do, I think the reaction to the pandemic provides a blueprint for what can be done in the most efficient way. EU policies during the health crisis were innovative, and I think they constitute a real breakthrough for Europe. The scale of the response was up to the challenge with the creation of the Resilience and Recovery Fund, what we call RRF, a fund for which Greece, Bulgaria, and Cyprus, for instance, are going to receive the highest RRF injection as a percentage of their GDP. Now, what is important with the RRF funds, but also with the other European programs financed either by EIB and EIF or EBRD, it is that this is not just helicopter money, or it is not at all helicopter money, but effectively they are focused exactly on the challenges we discussed earlier, namely the green transition and the digital transformation, along with three other pillars, which is further development of research and of R&D in these countries, exports, and facilitating the creation of large companies. I think this is exactly the strongest points of these EU programs and makes them a precondition for the positive scenario in the region. Obviously, the private sector has also a major role to play. And as I mentioned before, at Eurobank, we have decided to remain as a regional bank and not just a Greek bank, because we see expanding trade networks and many opportunities in the interregional exchanges. And after all, finding regional banking partners is instrumental in facilitating these exchanges.
Thank you, Fokion. I will ask one more question and then I'll give the floor to Vassili to take up Q&A. And my question goes to Deborah because I wanted to get her view on green transition and to what extent the environment you described in a skeptical way is kind of undermining the green transition in the region, both in terms of infrastructure investment, but also in terms of private sector corporate investment for green solutions in a way.
I think there is clearly there is a huge challenge, but also an opportunity, as you say, as everybody on the policy side would say. But I think it's really true in this case. The challenge is clearly that what we see in this moment is more protracted than expected energy shock. The more protracted than expected energy shock has immediate effect on households, in particular more vulnerable households, home corporates. It's again affecting with all the shock we had seen before of COVID, normalization of policies going on. So the temptation of simply compensating blankly for this price shock is there, and in some cases is also right to have a partial compensation. The problem is that if this is done, the whole incentive for the climate transition and for moving forward in the climate transition, they may actually be reduced. And talking about energy security as well, the movement into energy security depends how you do it, but can also bring you back in terms of the climate transition. So what I think it's very important in this moment, and the European Union is very much moving in this direction, is to give a clear direction in terms of a clear signal in terms of direction on the energy transition, try to create the path both for the transition but also for improved energy securities, but giving the direction in terms of movement, also in terms of national policies on what should be done. And I think there is a lot that can be done. One, and I think both on our side, and Francis will say the same on his side, energy efficiency is really the no-brainer in the response side. Rather than giving blank checks to people to afford paying for the energy cost, giving blank checks for doing energy efficiency investment, that could be something very, very, very efficient also in terms of moving then in the right direction going forward. So I think it's not necessarily a trade-off. It can become a trade-off depending on the policies that are implemented now. Clearly, we are facing a crisis, so it's difficult to balance. But I think that we should, on a policy point of view, have a very clear direction that the energy transition continues. Actually, we go in the energy transition. We could even leapfrog some step and trying to move fast in terms of this and focus very much on energy efficiency, also other than creating the right infrastructure and then the whole energy security side. But in the immediate compensating, rather than compensating consumers and firms with blank checks, I think focusing very much on energy efficiency is a fundamental. It's not clearly the overall solution. It's a multi-year process, but I think the signal is very important in this moment.
Back to you, Vassilis.
Okay, thank you, Anthony. I would like to open the Q&A session with a question by Ian Begg, a colleague here at the European Institute in LSE. And perhaps, I don't know if Francis would like to answer it, but also other members of the panel. So the question is, beyond the overall uncertainty arising from the war in Ukraine, obviously, how vulnerable are financial intermediaries in the region to extraterritorial effects of US sanctions, maybe also EU sanctions, on those inclined still to do business with Russia, and in particular also for the case of Serbia, given the, let's say, less unsympathetic stance towards Russia, does Serbia risk being especially vulnerable from US or EU sanctions?
Maybe I can take this one. Look, I think the one thing is sanctions, the other is what we see right now is much broader than sanctions. There's a large level of popular pressure for reducing reliance on Russia as a supplier. There's no sanction that forces Renault to stop doing business in Russia, or Nestle, or McDonald's, or and so on and so forth, right? There are, and similarly, there's no sanctions that are going to force people in Serbia to do this. One thing though is that, of course, the Serbian banks, most of them, a large number are actually subsidiaries of EU large banking groups. And so they are not only going to apply the sanctions, but probably what we see as well is a tendency by financial institutions to be broader in their definition of sanction, or to be more careful. That is, the sanctions on a certain subset of a country, and they say, okay, fine, then we're not going to open accounts to anyone from that country, all right? And we see this in Poland, actually, where a lot of Polish banks were telling me, look, we don't open bank accounts for Russians. It's not we don't open bank accounts for sanctions Russians, it's we sanctioned Russians, so we do not open bank accounts for Russians altogether, right? So I think this is a dynamic phenomenon. Right now, it is only going in one direction, which is to reject Russian contacts with Russia. How far and how long this will go on is of course anybody's guess. I just would like to also take the opportunity to agree with Deborah on the need to focus on energy efficiency as part of the response to the energy cost crisis. I actually don't feel that yet in the countries where I've just visited, and I think it is a shame. It should come, and that the price of energy increase should provide a much bigger incentive for everyone from households to corporates to really invest in energy efficiency, which, by the way, we all know is there's no way we meet the goals of the Paris Agreement by only working on the energy supply and investing in renewable energy and so on. If we don't work on our behaviors and on our consumption, we're not going to get there.
Thanks, Francis. Would somebody else like to come on this question? Okay, let me move to a question for the governor. By Romana Kafedzic, says she's a Croatian national. She's very interested to hear your opinion on how Croatia can progress the future of the younger generations, especially now that Croatia is in the EU, through the financial sector, and what can other industries do to support?
Thank you very much. I think that you do progress the future of the prospects of the younger generation through the overall economic policies in the country. And at the moment, I think Croatia is in a good position in the sense that we entered into the EU in 2013, which was very beneficial for Croatia. From 2014, it started to really recover from the crisis, and it has been turning both the fiscal position, current capital account position on the basis of entry into the European Union. And now Croatia will also be the first country that will not experience the decline in the usage of the EU funds after the first 7-year financial perspective because of the next generation funds. On top of that, it will probably enter the European Monetary Union in a matter of months, and also the Schengen. So I would say that these all these three things are very much growth positive for Croatia for the future, and particularly for the next few years. The government, however, and everyone, all the policymakers should use that opportunity also to push with the remaining structural reforms that we all know are overdue, particularly in the government sector, the public administration, judicially, healthcare sector. And if that happens, I'm sure that the growth potential of Croatia over the medium term is a very positive one.
Thanks. I think we'd like to bring in another question. I don't know if the governor would like to reply, or other panelists as well, by Neira Nalic Magarik, who I think is involved in microcredit in the region, and asking, could you please talk about financial inclusion and how will policymakers support digitalization in order to reach out to lower income people and their needs on financial services? So that's also a question for the institutional, for the development banks as well, I would imagine. I don't know, Deborah, if you'd like to say something for Fokion.
Yeah. Let me share with you my experience for that. I think microcredit is something important. It's part of the financial inclusion, and I think we have to support it. Let me share the experience we have in Greece with microcredit. Eurobank is the main bank which supports microcredit through the AFI, an organization that effectively sponsors this microcredit, and we would like to enhance further our cooperation with this institution. The government has recently passed legislation in order to enhance the operation of microcredit institutions. They can get a license from Bank of Greece. And I think we're going to be very supportive to such an idea. It is part of the ESG criteria, and we are committed to something like that.
Thanks. We mentioned Ukraine and Russia, of course, and COVID and everything else. There's a question that brings in China, of course, and by Zeliko Batica, if I pronounce it correctly. Thanks to all for your insights today. My question relates to the extent of exposure to China, to the China Belt and Road Initiative for Southeastern European countries, and the risks of loan and repayments with regard to that. Would somebody like to pick up on this? Less on China. I guess because in a previous time before the war in Ukraine, we were quite concerned about the positioning of China, both in Greece, but also in the Western Balkans and elsewhere in the region, but also investments from the Emirates and so forth. Are there any risks that you see now in the post-COVID and post-war in Ukraine era that come from China?
Vassilis, could step in. I said in my introduction that one of the global trends that we're going to observe over the next years is the deglobalization. And definitely this trend is going to affect the relationship of the West with China. I would expect that some of the manufacturing will come back from China to the West, to Europe, and I think Southeastern Europe having lower costs than the rest of the Europe could benefit from that trend. In Greece, for instance, we see investments in manufacturing, and I think countries like Bulgaria or Romania or Croatia could also benefit from this trend. Obviously, China has already a presence in a number of European countries, including Greece, especially in infrastructure projects. In Greece, they operate the Piraeus port, which is one of the largest ports in the Mediterranean. They have also a significant stake in the management for the high voltage electricity grid in the country. I would not expect that this presence will increase further because there is a decision at the European level to try to limit this presence. Overall, and I will close with that, I think the deglobalization effect will make the relationship, the trade relationship between Europe and China less compared to what was a few years ago.
Okay, thanks, Fokion. I have one of my own questions, if I may. Can I address it to Professor Vujcic directly? I tell my students here at LSE that systematically central bankers in the Balkans have been performing better than prime ministers or presidents in the Balkans. And I notice also we have in the audience a couple of very good colleagues, Aneta Kristeva from the chief economist in the Bank of North Macedonia, Eleni Louri, former deputy governor in the Bank of Greece. It goes everywhere, not only Western Balkans, but also Eastern Balkans, I think, Greece, Cyprus. Is there a secret to that? Why are the governors so much more impressive, I think, than, or am I wrong in my assessment?
Thanks for that question. I would say that the central banks overall seem to be really good institutions, often better than other institutions in many countries. And I would think that this is mostly because central banks, more or less, not always to the same degree, but more or less independent, really independent institutions from the politics. And that has been the main reason, I think, why central banks have been better equipped and were able to make good independent decisions over the time. Less involved in the politics, less involved in the day-to-day political fight that you have in the countries, and that's definitely something which make them better institutions. And I would say this is to a higher or lesser degree, but on average, the case in all of the countries.
Can I add a comment on this, because it's important? When people talk about what happened after the great financial crisis in the southeastern European region, they usually ignore or they don't comment on the very efficient informal coordination between central bankers, either between themselves or also between things like the Vienna Initiative or the ECB. And this is really not been recognized so far, and I wanted to just to bring it to the attention of the audience.
Oh, that's definitely the case, Anthony. Thanks a lot for that remark. I'm the chair of Vienna Initiative, so I really believe that Vienna Initiative had a very positive role, particularly after the great financial crisis, that it acted promptly and efficiently and stays a good coordination body. And also at the European level these days, the central bankers' communication is a very good, very frank, very active one. Also now during the wartime in Ukraine, on a number of issues that we deal with. On some of we have already found solutions or the ways to proceed, and on some others we are still discussing, but the discussion and the cooperation is very active and very useful.
Yep. Thanks. So good institutions in the region and outside the region, and independence. I have another question which I will address to the international banks for Deborah and Francis, because you both mentioned paid quite some emphasis on energy efficiency, energy sufficiency, the green transition, and there is this small paradox, I think, that we are asking a big step, which also the West hasn't really found a way how exactly to do it. And we're asking some countries which are really, they don't have the scale, they don't have the level of development, the capacity, they have other systemic or structural problems, think Kosovo, Bosnia, to do the green transition and to, but you did present it as an opportunity, as a threat, but also as an opportunity, especially for the corporate sector. So is there a sense that maybe we can differentiate this and expect more on the green transition from perhaps places like definitely Croatia, maybe Serbia, definitely Greece, but less so from, I don't know, Kosovo, Montenegro, and Bosnia become 3 random countries. Deborah?
I think I think that it's very difficult to think at a different speed of in terms of energy transition and green transition across countries. So what we can think about is kind of compensating some countries in terms of much more policy support, international support, and much more technical capacity also to manage the transition. But thinking at a completely different speed, and particularly speed, maybe you can adjust, but allowing a decoupling between some countries moving much faster and other not moving in the direction, that would be extremely difficult. Also because it would be difficult then to isolate. This is also a region that is very much integrated in international trade, in global value chain, etc. How do you manage a differentiation in that point of view? So I think it should be the same direction for sure. If you have to accelerate speed, it's fair to think at compensating mechanism, and actually that's what I think we are trying all to do. Compensating mechanism in terms of more policy support on the financial side, but also on the technical capacity side.
I mean, first of all, I fully agree. The second thing I'd like to say is that we actually have a framework for this, and that's called the Paris Agreement. Each country prepares their own contribution, makes its own proposal, and then that is kind of their own commitment, right? So yes, there's peer-to-peer pressure, and we do hear occasionally, you know, why do you ask us to do things in this country that the richer countries do not do until a later date? But the truth is, we have this framework, and it's really important. The other thing that I think is important it's important to frame this in terms of the competitiveness of the country. Energy is a key determinant of competitiveness in many industries, and especially if the EU implements its carbon tax, it will actually become much more important for all of these countries to invest. And then, of course, there needs to be funding for the investment. And maybe they're going back to the question about, you know, some of the state-to-state loans that we heard about. My take on this is a free loan. You know, it's like an economist would say, there's no free lunch. There's no free loan either. If you believe that there's a free loan, it means that you do not see the links, the ties that come with it. And then the ties, you know, the strings are attached still. So beware the free loans, because it comes with strings attached.
Good point. We're running out of time, but there is one more question, which is a bit more Eurobank specific, so addressed to Mr. Karavias. Let me take it by Kostas Falangas. I think is there a general provision by Eurobank concerning the continuity of hotel investments in Greece today, taking into account the war in Ukraine, as well as the provision in the general operation cost of hotels due to the provoked inflation? So, Mr. Karavias, any comments on this?
The people of the hotel and leisure sector expect a very strong year for 2022. Last year we had, as a country, revenues of close to 60%, slightly less than 60% of the 2019 revenues. For this year, I would expect that revenues will go more than 80% of 2019, and some people expect to approach the 2019 figure. So overall, the prospects for the Greek tourism are very positive. The revenues that Greece had from Ukraine or Russian customers are very small, and are not expected to affect the outcome for the year. Now, inflation obviously is going to increase the operating cost of hotels in Greece. I would say that inflation should increase the operating cost of hotels across Europe. And as a result, we may see the margins for the industry to be smaller compared to last year. Therefore, profitability, although sales will be higher than last year, the revenues, the net profit may be not higher than 2021. However, what really counts is the top line. So it is what kind of sales we have. And on that, as I said, all the members of this segment are very positive and very optimistic.
Thanks, Fokion. As I pre-announced, we ran out of time, but I think we had some very informative and very important points. The positive messages, declining NPLs, a sense of strength and a solid base for the banking system in the Southeast Europe region, thanks to good regulation in part, but in general, good messages. Also, of course, a number of challenges with digitalization, with development of capital markets, and of course, threats more general, more systemic, if you want, energy, obviously the war in Ukraine, and so forth. I hope that was quite informative for our audience. It was definitely a pleasure to have all the distinguished speakers that we had today. I promise, as at least from part of the LSE Southeast Europe at Research Unit at LSE, to revisit the topic and come back to that, hopefully have the opportunity to host you again as speakers. So virtually, I ask the audience to join me in thanking all our speakers for the very interesting presentations and discussion. And we'll see you hopefully at another event by the Hellenic Observatory and LSE Research in Southeast Europe after the spring break. Goodbye to everybody.
Thank you.
Goodbye. Thank you.
Bye.